I hope everyone is as excited as I am to learn about investing across on-chain economy. Today I'm gathered with 4 legends in the investment ecosystem. Should we do some quick intros? Do you want to start, Gökhan?
Yeah, sure. This is Gökhan. I'm with IOSG Ventures. I'm a managing director there. IOSG Ventures itself is a Web3 investor based in Asia. We've been investing in this space since 2017. We do investments on the both primary market and the liquidity market. That's pretty much all. Yeah.
Yeah. So yeah, co-founder and partner Hashed. Hashed, like we originate from Korea, and we are positioned as a bridge between U.S. market and Asian market. Yeah, we are officing and everywhere, and like we are more investing to application layer. Yeah.
Akshat?
Yeah, my name is Akshat Vaidya. I'm head of investments for the Arthur Hayes family office.
Ryan.
Hi, everyone. I'm also Ryan. Nice to see you. I'm a partner at Pantera Capital. We've been investing in this space since 2013 across both liquid markets and private markets, which is where I primarily focus, so both tokens and equity.
I want to start with a fun question. So if you could have anyone, any historical figure, dead or alive, starting a fund with you, who would you choose and why? Maybe based on their attributes, their skills?
I'm happy to take this one first. In this made-up world, I would start my new fund with whoever the future chair of the SEC will be. It'd just be great to know where the puck is going, and I think it'd be a huge competitive advantage.
Oh, that's perfect. Yeah, I think I'm going to go with probably Nikola Tesla, and the reason for that is when you're doing primary market investments, there are 2 things that matters the most. One of them is actually you have to just imagine a world how it's going to unfold in the next 5 to 10 years. And I think this guy had it right, maybe even longer time horizons. And then the second one is he was himself the underdog for such a long time. And having this founder experience when you're investing, I think it helps a lot to guide the projects that you're investing in. So yeah, I'm going to go with him.
Dave.
Yeah.
Ryan.
Yeah, this is just fun question, so I will just casually just answer.
Exactly.
I will have a fund with Nostradamus, which is like fusionist, because basically the investment is like expecting how the future will come, and we have to make a high resolution of the future. So maybe Nostradamus can make the more what will be a next future and what will be a next trend. So maybe it'll be fun to have investment together.
Yeah, I think in that same spirit, I would probably pick someone who I thought had one of the best predictions for the future based on the historical information he had at the time, which was Karl Marx. I think given the information he had at the time, he probably had one of the best broad macro structural predictions for the direction mankind would go. And that would be really useful to have on the investment team.
That's great answers. How do you guys balance between investing on foundational blockchain technologies versus application-focused projects? Gökhan, do you want to start?
Yeah, sure. So at IOSG Ventures, I think around 70% of our investments are in the infrastructure part. And we did historically 30% investment on the application part. And the reason we were heavily investing on infrastructure is just simple, that the infrastructure for blockchains is just not ready, right? It's been, I think the main problem that people were facing was the scaling of the blockchains. And there has been a lot of investments into this modular framework from all the way to, from the data availability layers to rollups that are building on top of it. And then now you have L2s and L3s that are coming up in the market. But then I think this was a must. And still today, we haven't scaled the blockchains while keeping certain qualities of them. That is security and decentralization part of it. So I think we still have a way to go when we're investing on the infrastructure. But then eventually, there must be some sort of a transition into applications, right? And then I think we invested in, for example, a couple of games, a couple of SocialFi projects in this space, and obviously the DeFi projects themselves. So what's happening there is you have to find the applications that fit the current throughput of the blockchains. So I think what happens there is you have to find the applications that have high stakes so that people would be willing to pay high fees because they have to, serve for some high-stakes games or value on the blockchain. And those are the use cases that makes a lot of sense on the application part. But then as we transition, as this blockchain scale, I think there will be more and more investments that are being made onto applications then we're going to see more games coming in, more social-fi projects coming in. It's just a process, but it's difficult to switch the hat, I think, as investors in both of the stack. But then in the next couple of years, we expect to invest maybe like around 50% on the apps, rather than the 70% we did in the past.
Ryan, Barney, do you want to comment?
Sure. It's a great question. I think to be really good in this space, you need to be thinking about both at the same time. Like at Pantera, we think about investing in blockchain specifically as those that are solving both engineering and computer science problems for developers. And like if that is not a core like kind of use case, I think we typically stay away from it, because if you don't have those core computer science and engineering problems solved, like faster, cheaper, smarter, etc., great applications can't be built on top. Similarly, if applications are using a blockchain that don't necessarily need to, because like the insight of the engineering problem isn't important, we kind of look at it in a different light. So I think keeping both in mind at the same time is super important for us.
Ryan, Kim?
Yeah, so you're based in Asia, so if you think about like Asian population, it's like massive users are using Binance, OKX, and even in Korean market, it's up bit. If you think about the registered user in Korea, 10 million user are registered user. If the total population is 50 million, so 20% of the users are exposed to crypto. That means the density is really, really high. That means like even though like not even like the developer are joining to crypto space, but so many retail investors are very into, of course, the investment activities. But actually, once a lot of gaming application comes out, then like so many users are onboarded to the application layer. On the other hand, like a US market is more like VC-centric market. That means like a lot of developers building infrastructure, and when they onboard the mega VCs, then they just build the infrastructure for 3 to 5 years without any concern of fundraise. So I feel like the US is more like infrastructure-centric. Asia is more like application-centric. So we are more like combining this like market characteristic. So we are help them each other. Like for example, like US infrastructure, we introduced a lot of application in Asia to onboard their infrastructure. On the other hand, like application layer in Asia, if they want to onboard a lot of US like funds, then we connect them to them. So like there's a pros and cons in each market.
Akshat?
Yeah, I think it depends on what part of the cycle you're looking at. So often, a meaningful infrastructure stepwise jump will kickstart a Cambrian explosion that then ushers in the new wave of apps. I think more value accrues on those apps, but there's an opportunity in that dislocation initially to make a lot of money investing in the infrastructure. But then you kind of got to pivot, as you said, right? It's hard to like separate these, but it's almost somewhat of a razor and blade kind of model, but to investing, where you pivot quickly to the apps, because that's where most of the value is going to accrue until the next wave of infrastructure improvement.
What do you consider the most promising areas of investment this year?
Well, I guess our culture, so Arthur is very much an apps kind of guy. So we're going ham on DeFi this year. DeFi on Bitcoin, DeFi on the old stuff, just like anything DeFi.
Gökhan?
I think maybe one thing that's super hot on the Asian part, maybe not necessarily so in the Western part, is the Bitcoin ecosystem recently, right? Like a lot of investment and research is being done where you could actually stake your Bitcoin and earn a yield on top of it, or you could use your Bitcoin to secure the L2s that are building on top of it. So there are questions in terms of how realistic that technology is, how long it's going to take to go to market. But I think we see a lot of smart people start working on these problems and trying to solve them. So there's a light at the end of the tunnel. This is the area that we've been checking a lot recently.
Ryan, Kim?
Yeah, so if you look back to Web2 area, at the beginning, gaming sector came out, and then advertisement, and then like e-commerce, and then like a SaaS and B2B, a lot of business came out. So back to 2019, we invested in like Xfinity and Sandbox because we believe the gaming sector should be a first sector. Of course, DeFi came together with gaming, But still, we believe gaming and contents area is very easy to onboard a lot of retail investors and retail users. Everybody is like, like saying like, what is who is the real user, and what is the mass adapted application. But eventually, I think the gaming is the thing. And next year, I guess, we are putting a lot of effort to find out the IP area. IP means like a K-pop or a Japanese anime, because everybody want to own the IP, because fan engagement platform or like they really want to involve not just consumer but as an owner, so they want to participate. So we are incubating a lot of projects like that, and believe it's a very easy to scale out.
Ryan.
Yeah, I mean, following up to what these guys said, timing of investments matters. So right now, we're absolutely looking at DeFi, and we're kind of like the app usage is happening. We also take a pretty long-term view of the world, and one thing we're super excited about right now is stablecoins and stablecoin infra, specifically how it enables like better remittance and better trade finance internationally. It's like an amazing use case of crypto that I think will be sustained regardless of overall crypto volatility and prices. So we're going really deep there and excited about that, regardless of the point in the time the cycle we're in.
With the global perspective on blockchain investments, what differences do you see in the blockchain adoption and innovation between different regions like Asia, Europe, and US? Gökhan?
Sure. So we have offices in Hong Kong, in Shenzhen, in Singapore. So we have a little bit more insight into the Asian ecosystem in that sense. But I think a lot of people usually underestimate what sort of an ecosystem there, community there in Asia. And if you look at it historically, like these guys are one of the first adopters of Bitcoin. Some of the first exchanges got invested by Sequoia China back in 2013. They were one of the first ones to actually implement and bring volume to perps, like one of the DeFi primitives over there. So I think Asian community is super strong, and you have all these different sorts of people there, the exchanges, the market makers, you have the Bitcoin miners, the stakers. Many of the applications you have on DeFi or NFTs, the power users are actually, a lot of them are coming from Asian part as well. So the community itself, regardless of what the governments are taking in terms of the action and regulation, is super strong in Asia. And I think that has a couple of implications in terms of what sort of adoption or innovation you see on the Asian side. And one of the things I think I just said is Bitcoin L2s, Bitcoin staking is super important, because Asia in general has much more Bitcoin-friendly whales and community over there. And this is something that interests them a lot. On the other hand, I think historically on the infrastructure part, the West has been more stronger. I think if you look at like the top infra projects, they're all coming from the West. But then as we move into the app stack, we're going to start seeing more and more Asian people coming and building on the, the gaming part, on the social part. This is something that we're expecting and preparing for. We have an office in Shenzhen right next to Tencent building. Tencent is one of the biggest gaming companies in the world. And we already know that a lot of people from Tencent have started building games, and like they're coming us and like trying to discuss these GameFi projects. So I think Asia is going to be a little bit more app stack and like, in this case, like gaming and social oriented. And then West has been historically very strong on the infrastructure part.
Akshat?
Yeah, I mean, I would echo that. I think the only thing I would add is you're also seeing a lot of Western teams relocate abroad, which is, I mean, it's neither a good thing or a bad thing, but I think it is a failing on the part of the Western regulatory environment that's forcing people to do that, because those could be, homegrown companies and like national champions that are being sent to go be based in, like Portugal. So
yeah. Ryan?
Honestly, not much more to add. I think crypto's unique in the fact that it really is like global and crosses borders more than other technologies. So I think there's learnings from every geo, and yeah, I would echo what's been said. I actually view it as unfortunate that people are leaving the West to build elsewhere. Like, I want it to be homegrown. So hoping that changes.
Yeah.
Go on.
Actually, I think this trend is more, stronger in emerging market, I believe. For example, like if you think about the Binance top 5 volume, it's Korea, China, of course, Vietnam, India, Turkey, and Brazil. So basically, like once like the currency is corrupting, then there's huge demand to come into a Web3 ecosystem. So if you think about Turkey now, so lira is coming down like almost like going down very extremely. So a lot of guys just came into a crypto space and building and making money with mining or staking, whatever they want. Like this, like very actively they're participating. And also, like for example, like long time ago, I met Decentraland Ari, and his story is like 2013 when Argentina corrupted very quickly. He at the time he was studying in California. He had to send money to Argentina, but there's no way because the local currency was corrupting. So that's how he involved to the Bitcoin. So this reason, that reason, very easily the emerging market founder retails, they're all exposed to crypto very quickly. And I feel like especially Asia region is more like, expedite this trend very quickly.
We just touched regulation, but feel free to expand beyond that. How has your investment strategy evolved throughout the years? Ryan?
Yeah, well, I think 40% of our investments today have been outside the US. I think a lot of that is regulation driven, primarily because like in other geos, there's just a lot more openness, and that, therefore creates experimentation, which is what new ventures are all about. So we spend a lot of time there. I think specifically like Hong Kong, Singapore are really amazing because they are more regulated than the US, but they're clear in their regulations is what I mean. And that's important because it gives people kind of like the lines to build great projects in. I think US and Western specific investments, like the one thing that drives our investments is the team. And we, along with the team, hope that they are building for where we think the world's going to be in 5 years, not where we are today. So we're kind of not ignoring regulations, of course. We're working within the very murky, gray area in the US, but still really bullish there. And I think that's proved out. We've had portfolio companies that have, been successful in SEC, lawsuits that are pretty public. And, we hope that continues to be the case, and hopefully regulations do change. So we're
Akshat?
investing in the future, not what the regulations currently do or don't say.
Yeah. I mean, our team, Arthur's based in Singapore, I'm based in Hong Kong, and the rest of the team is in the U.S. We kind of straddle both worlds, and I think there are pros and cons, right, to the model. In Hong Kong, regulators wake up one day and they say, now this is kosher. They wake up the next day and they say, no, this is all banned. There's no like legitimate process there. It's just kind of how do they feel one day. At least in the U.S., you do have case law. You have a court system. You can you can kind of predict the trajectory. So I think that's a plus, but it's slower as a result. So I don't know. It's hard to say how that really impacts our investment strategy, but we're kind of the same way. Vast majority of the deals we've done are U.S. or European founders abroad serving mostly Asian clients, and that's just. I wonder how long that's going to be that way.
Yeah.
Ryan?
Yeah, already U.S. and Hong Kong side to mention. So maybe Korea, Japan, maybe Abu Dhabi. I can talk. So Korea is more like following the U.S. rule, U.S. guide, because very dependent on U.S. guideline. So they're waiting for it. They're not that hostile to crypto retail or founder, but they want to prevent the scammer and fraud, and money laundering. So basically, they are following the travel rule. If you look at the Korean exchange, like Upbit, Bitsum, all the crypto founders want to list on Upbit now. But the problem is like the listing process is getting very, very slow. And like the Korean government perspective, they want to consolidate all the listing process out of the Korean exchanges. For example, like now it's like Binance, OKX, they have a separate listing process. So founder have to approach like each exchange separately. But Korea now is like from the government guideline, like once they decide to list, then the coin will list to Upbit, Bitsum, and Corebit, all separate, exchanges at once. So like the Korean market is getting more regulated, and Japan recently they are opening up for the Web3 market the government recently announced we are going to Web3 and recommend all the institutions to do Web3 activities. So also we are meeting a lot of Japanese companies, and they're all eager to do Web3. I mean, for example, wallet, NFT marketplace, exchanges, custody service, etc. So, and if you see a Japanese stock market, they're all-time high. So I feel energy that they're eager to do something. They want to recover the last 35 years, bear market. So we'll help them out to do something else. And Abu Dhabi perspective, Singapore is getting very slow after FTX collapse. Hong Kong already a lot of talents and capital move out, so they want to bring back them on to Hong Kong. And out of sudden, just UAE came out and they're taking all the capital and talents. So also we are looking at, meeting a lot of regulators here, what's going on, and maybe recently I really recommend a lot founders to establish a company in Abu Dhabi.
Okay.
And also Dubai. Yeah.
Okay.
Yeah, for us it's similar. I think historically around 55% of our portfolio, they are the US-based founders, 25% is coming from Europe, and then the rest is spread around the world. But crypto itself is such a global, accessible market. I think the founders also adapt to it very quickly. As people have mentioned, when China banned crypto, you immediately started seeing the founders moving to Singapore, Hong Kong, or the US. It is still the Chinese community building, but based in different countries in this sense. I think the same happened when US was much more strict about crypto. Then you have the US founders moving to other countries where they could still serve this global crypto market. So I think it doesn't really affect specifically our investment strategy, but it just affects where the founders are based.
And let's do a quick round, quick answer for a recent investment that didn't go as planned, and what lessons you learned from that experience. Starting here.
Ooh, that's a tough question. Well, there was a deal we did recently that TGE'd, and I'd say it went well, quote unquote, but faced a lot of flack. So the deal in question is Athena. It's a synthetic dollar. I think it's a great product, great founder. There's been a lot of chatter in crypto Twitter of people, just kind of questioning the safety of that project and stability. I think what that kind of taught us was, what's objectively a pretty straightforward trade that's tokenized, essentially, to create the synthetic dollar. It seems like a very intimidating thing because of the scars of the past, couple of years. So I think just getting ahead and really teaching the market about the product before anything is live is probably key. Something that we're going to make sure to do in future projects.
Ryan Kim.
Yeah. If you think about a Web 2 area, if you go to Web 2 fund, then they all advise you have to focus on product. Good product will bring good user, and that will be scale up. But crypto is more like hyping first and make product later. This formula always works, but we want to change eventually because it's too much speculative, and eventually, I think project have to deliver the product properly. But I can see so many founders, they're already making hype. They already list on Binance, OKX, whatever, and they don't deliver the product forever, 3 years, 5 years. So I want to change that trend, but still the hype is 80%, product is 10 to 20%. It's getting more, the ratio is getting more, a little bit changing to product, but still current market is more way on the hyping. So we need to educate our founders. Current situation, they have to do more to put more marketing and education and making a community, make more bullishness in the community is helpful for the project.
Gökhan.
We invested in Volvo Finance back in, I think, 2021. It's a DeFi options protocol. And the founder was great. And I think what happened was he returned the money, almost like a majority of the money, just last year. I think there were two things. The founder was not Web3 native, and Web3 nativeness is something that we actually value a lot, because those founders were getting into the space from Web2. I think crypto has so many different characteristics that doesn't really fit a Web2 founder, or it takes time to adjust to it. And sometimes this adjustment gives a lot of pressure to the founders, and some other times it just doesn't happen. So the founder, on the one hand, I think adjusting to Web3 was tough. On the other hand, the options protocols in Web3, it hasn't really taken off except for one or two projects in the space. So it was the market not moving forward. It was him actually struggling there. He decided to give back the money to investors. Like great investor, but sometimes it doesn't work.
Yeah. Brian.
Yeah, for us, I think that the lesson, and I'll get to the company, is being aware of companies with concentration risk in the thing that is currently super hyped. So last cycle that was NFTs, and we invested in one or two software companies that only sold to NFT companies, of which there's only a few large companies in this space. So when those companies don't do well, customers churn and that company goes out of business. So one specifically is called Optic. They were kind of doing NFT authenticity on OpenSea. Great business, they're doing awesome. They've since pivoted and now they're a biotech now, we're biotech investors. So the lesson is invest in great teams because they always figure out a path, but yeah, customer concentration is a problem in a market with discovering assets.
Mm-hmm. How do you filter through genuine innovation and just mere hype? What are some of the red flags? I'm going to start here, Akshat.
Well, yeah, I mean, there's a lot of red flags in this industry. I think, there's definitely projects that try to focus on very minor technical attributes as their primary form of differentiation versus ones that understand that even a B to B to C or even a B to B to D, whatever business model, requires a very strong and robust go-to-market strategy. So I think you see, for example, the plethora of L2s. There's just like so many, and now there's Bitcoin L2s coming. Every single VC's desk. There's a dozen of them now, and the differentiation cannot just be technical. It's also got to be what kind of ecosystem, what kind of community can you galvanize to build on your platform. And so I think that's probably the first one, when there's just too much emphasis on very minor technical differentiation. Well, I think I'll just leave it at that.
Gökhan.
Yeah, I think another thing I would add is maybe it is specifically within crypto, there are different hats that you have to wear. Like on the one hand, there's this a very breakthrough innovation happening on the technological side, let's say on the infrastructure, on the ZK space, on FHE space, etc. But then as a crypto founder, you have to combine it with the community hat. Like you have to wear that hat and build a community around what you're building. I think the greatest founders in the space are the ones that have actually successfully combined these two things together, right? Whenever we see a founder who's just focusing on either of these and just trying to cover the other part with one of these, I think that shows itself as a red flag to us, orange flag, let's call it. But then we try to find the ones that combine the both of them best.
Brian?
Yeah, well, I mean, our primary job is to return money to our LPs, and I think we know you can do that both with really hyped projects, maybe with not great technology, and also with non-hyped. And we reflect that in our fund, which allows us to take long-term bets in private investments and also trade in and out of liquid positions. So I think we know how to play both games and do it well. I think structurally there's some things we do to make sure we're investing in something that kind of has a long-term view. I think the first and foremost is being aligned on founder vesting, and when the team vests, as investors, we also want to be either ahead or on the same schedule, most often the latter. Super important. That's the biggest, just from a binary kind of structural thing, have to be aligned there.
Brian?
Yeah, I already talked that the founder focus too much product, but they're not talking with community or resonate with the community. Then I think that is a red sign, and always they have to onboard the users and have to talk about how they can evolve a better way, and maybe they can make a balance between a product and visioning. I think that's very important. The other side is sometimes founders they're changing the item very quickly, very frequently. Like 3 months later, DeFi is very hard. So they're going to make a DeFi, or 6 months later, GameFi is very hard, so they make a GameFi. So we want more we want to see this product, not just this bull market, but maybe it can be a very hype in the next bull market. So I want to make this founder to focus on the long-term vision and build a relationship with the community and investors on top of a very, very strong foundation.
For everyone here in the room, if they want to keep up with you guys, where can they find you? Starting here.
Twitter, it's Akshat_HK.
Ryan?
Yeah. The Telegram, Ryan, SHKIM. Yeah, Telegram's a better way.
Yeah, Twitter, Telegram, my surname, name, surname, or hello@IOSG also works.
Also on Twitter, first name Ryan. I think it's 2 underscores, Barney. You'll know when you find me, I guess.
Any of you on the Web3 socials?
No.
No?
I'm not.
Okay, I'm going to wrap it up here. Thank you so much.
Thank you.
Thank you.
Thanks.
Thanks, everyone.